One of the hard parts about being a dividend-focused YouTuber is trying to appeal to the many different kinds of dividend investors out there.
It's just so many!
Well, in my attempt to do just that, welcome back to the Power 5 Stocks of the Week. In this series, each week I present you all with the top performers in the following categories: dividend yield, dividend streak, dividend growth rates, 10-year returns, and the stock trading the highest percentage off of their 52-week high. All of these stocks are going to have an ex-dividend date of next week, and the only requirements for consideration to be on this list is that you have to outperform the S&P 500 over the past 10 years and have a dividend streak of at least 5 years.
Well, that sounds good to me.
If you're looking for a different take on a top 5 series that you won't find anywhere else on YouTube, make sure you hit that subscribe button and tune in each and every Friday.
Yes! Press the red button!
Really quick, before we dive into this week's video, I wanted to show you how this week's list was broken down when my filters were applied. I began with 43 different dividend stocks that had ex-dividend dates between July 10th and July 14th. Then I went down to 21 stocks once I required them to also have a dividend streak of 5 or more years. Finally, the list was brought down to just 12 stocks, or 27.91% of the original list, when I filtered for only the stocks that had outperformed the S&P 500 over the past 10 years. From there, I let the numbers speak for themselves, and here are the best of the best. This week's stock with the highest dividend yield is one I personally own, and that's ABBV, stock ticker ABBV. ABBV is a quarterly payer in the healthcare sector, paying $5.92 per share per year, with a forward dividend yield of 4.36%. ABBV has been paying and growing their dividend over the last 11 years. They have a 3-year dividend growth rate of 9.16%, a 5-year dividend growth rate of 16.78%, and a payout ratio of 44.16%. ABBV has an ex-dividend date of July 13th with a payout date of August 15th, and a $10,000 investment into ABBV 10 years ago while only reinvesting dividends since then would have turned into $48,792.47, which is a 17.17% year-over-year return rate, whereas the S&P 500 in the same time turned into $33,154.13, which results in a difference of $15,638.34 on the side of ABBV. This week's stock with the longest dividend streak is McGrath Rent Corp, stock ticker MGRC. MGRC is a quarterly payer in the industrial sector, paying $1.86 per share per year, with a forward dividend yield of 2.03%. MGRC has been paying and growing their dividend over the last 31 years. They have a 3-year dividend growth rate of 6.66%, a 5-year dividend growth rate of 11.85%, and a payout ratio of 34.86%. McGrath Rent Corp has an ex-dividend date of July 14th with a payout date of July 31st, and a $10,000 investment into McGrath 10 years ago while only reinvesting dividends since then would have turned into $35,804.29, which is a 13.6% year-over-year return rate, whereas the S&P turned into that $33,154.13, resulting in a difference of $2,650.16 over the last 10 years. This week's stock with the highest dividend growth rates is Owens Corning, stock ticker OC. OC is a quarterly payer in the industrial sector, paying $2.08 per share per year, with a forward dividend yield of 1.68%. OC has been paying and growing that dividend over the last 10 years. They have a 3-year dividend growth rate of 23.67%, a 5-year dividend growth rate of 16.24%, and a low payout ratio of just 13.74%. Owens Corning has an ex-dividend date of July 15th with a payout date of August 4th, and a single $10,000 investment into Owens Corning 10 years ago while only reinvesting dividends since then would have turned into $35,615.58, which is a 13.54% year-over-year return rate, and we know the S&P 500 turned into $33,154.13. That makes a difference of $2,461.45 over the past 10 years. So we're down to the last 2 categories in today's video, which are the best 10-year returns and the stock that's trading the highest percentage off of their 52-week high. Before we uncover these 2 stocks, please help me get my content to others on YouTube that might enjoy it by hitting that like button, and then make sure you're subscribed with the bell rung so you don't miss any of my future uploads. Lastly, if you do ring the bell or already have it rung, comment down below #BellSquad so I can thank you. But now, let's get to these final 2 stocks. This week's stock with the best 10-year returns is Cadent, stock ticker KAI. Cadent is a quarterly payer in the industrial sector, paying $1.16 per share per year, with a forward dividend yield of 0.55%. Cadent's been paying and growing that dividend over the last 11 years. They have a 3-year dividend growth rate of 4.18%, a 5-year dividend growth rate of 4.37%, and a payout ratio of just 11.44%. Cadent has an ex-dividend date of July 12th with a payout date of August 10th, and a single $10,000 investment into Cadent 10 years ago while only reinvesting dividends in return would have turned into $78,918.32, resulting in a 22.94% year-over-year return rate, again compared to the S&P that turned into $33,154.13, you would have been $45,764.19 better off investing in Cadent. And here you might have a great opportunity to buy a great stock at a low price with this next stock. This week's stock trading the highest percentage off of their 52-week high is Dollar General, stock ticker DG. Dollar General is a quarterly payer in the consumer discretionary sector, paying $2.36 per share per year, with a forward dividend yield of 1.38%. Dollar General has been paying and growing their dividend over the last 9 years. They have a 3-year dividend growth rate of 19.79%, a 5-year dividend growth rate of 16.17%, and a very low payout ratio of just 21.11%. At the time of recording, Dollar General is trading 34.57% off of their 52-week high. Dollar General has an ex-dividend date of July 10th with a payout date of July 25th. And $10,000 into Dollar General 10 years ago while only reinvesting dividends since then, despite the recent drop, still would have turned into $37,183.26, which is a 14.03% year-over-year return rate. And we know the S&P 500 turned into that $33,154.13, which results in a difference of $4,029.13 on the side of Dollar General. As mentioned earlier in the video, each of these stocks has outperformed the S&P 500 over the past 10 years. All of them have a dividend streak of at least 9 years, and they all go ex-dividend next week if you choose to make the purchase. Let me know down in the comments which of these stocks piqued your interest and what it was about that stock that got you excited. And if you're new to the channel, I have a great series that goes live each Sunday called Dividend Discussion. In this series, I interview others in the dividend investing space and let them tell their story. One of my main goals of this series is to be able to take something out of each and every one of these conversations to make us all better dividend investors. If you missed the latest episode, check that out right here. But until next time, see ya.